What's up, everybody? It seems like every time I do a reaction video about interest rates coming up from all-time lows, I tend to get some comments from the sidelines of people saying like, you don't know what it's like, you've never lived through high interest rates, it's gonna go to like double digits and it's gonna bankrupt all you greedy landlords. And I just got to thinking like, interesting. Because I've been doing this stuff for a couple decades. I've lived through the high interest rates. I grew up in the 70s and the 80s, so I know what it's like. And a lot of the stuff I do works with high interest rates anyway, so why don't I film a video? And that's why I'm here today. Let's give you the playbook. I mean, the chances of interest rates going that high are pretty slim, but at least if they do, we have the playbook. So let's jump right in so that you know what you're doing when it comes to the best strategies here when it comes to real estate investing. All right, before we dive into the video here, let's talk about a couple elephants in the room. The first one is we've had tens of thousands of views on the channel, but not everybody has absolutely smashed that subscribe button, hit the like button, or dropped us a comment below. We'd really appreciate it actually if you did all three on this video. It really helps the algorithm when it comes to all things YouTube. Now, the second elephant in the room is for people that are flipping, this is one of the strategies that we're gonna go through today. Now, flipping works at 10% interest rates because you're really gonna be buying the property, fixing it up, and then releasing it back on the market for a sale. However, if you're a flipper, I'm sure you know this, but if you aren't, because I know it's a very shiny strategy and it gets a lot of attention on TV, you gotta be mindful of flipping in this market right now because we don't know where the bottom is, right? So if you follow these three tips though, you'll be in good shape. The first one is make sure you're getting a massive discount on the buy, like bigger than normal, making sure that you're gonna be positioned to make a lot of profit on that deal. Finding the best motivated sellers. You need to make sure that you're turning the property over really quickly is the next one. So you gotta have a handle on the construction crews, get in and get out, maybe even own a construction company. I think you'd be in a good position to do that. You get everything at cost. And the third one would be, hopefully you're buying it in cash, or I know we're talking about interest rates here, so you kind of like sidestep interest rates if you buy things in cash, but at least then if your holding costs are cheaper, you stand a much better chance of getting a profit on a flip. So right now flipping, and to me, when you look at the different traffic lights, it's a red light strategy. Just proceed with caution and make sure you have all three of those things on lockdown before you proceed with any flips. All right, now let's talk about the second strategy here, which might be the most obvious one that a lot of people are talking about. It's getting a lot of buzz these days. And yes, you guessed it, it's short-term rentals, okay? Short-term rentals are doing extremely well, but you need to be mindful of a few things. Now, you don't even have to play on Airbnb. A lot of people are hesitating because they're like, I don't know this whole Airbnb thing and the stakes are pretty high, which they are. For you to do well on Airbnb, you need to make sure your pictures are on point, your listing's on point, everything looks great, photos, description, all that sort of stuff. And launching it is super important too. But you don't have to absolutely use Airbnb for your short-term rental. I'll talk more about that a little bit later in the video here. I actually like to play in the medium-term rental space. It's kind of like that sweet spot for me. I'm not dealing with the constant turnover. I'm not dealing with the constant messaging, the constant cleaning. So I need way less staff to manage it. I still get a higher yield because I'm providing an extra service to the marketplace that's in high demand. But we will give you some examples here of people that are just crushing it on Airbnb, or some examples so that you use specific examples so you can see that. The first one is a friend of mine, James Sevick. So James actually teaches in the Airbnb space. I'm sure there'll be a screenshot of James covering his cottage that he also bought with Riley Oakall. And at a purchase price all in for $520,000. Yes, they bought this during COVID, so they got a good deal on it, but the return is ridiculous. Over the past 2 years, like you can see in the screenshot here, they've profited over 6 figures, which is amazing. And I'm sure next year they'll continue to do it because they've got that traction, they've got the reviews, and they've done everything really, really well. James has actually written the book, Airbnb for Dummies, so go make sure you get a copy of that from James here. But I want to make sure that you don't have to be like James here to be a superhero when it comes to Airbnb investing, even though he's done some really ninja moves with his property. There's just a lot of people buying in-demand properties between that $500,000 and $700,000 price point range. They don't even have to be cottages or luxury properties. I would actually recommend not getting into that for your very first one. You can buy a good solid multifamily property, BRRRR it, and then furnish some or all of the units, like bring it more into the city center where there's a high demand. Make sure you're doing your research though, like go buy the data packs on airdna.co, research your competition, talk to people, and make sure that there's a high demand for what you're gonna be proposing to the marketplace. And then make sure that you do it really well. Like the stakes are pretty high when it comes to these things. But the good thing about raising your standards is there's a lot of room at the top as well to play and stay up there. So those are my pieces when it comes to Airbnb. A couple more examples here would be like Shelly Church's video that she posted a couple weeks ago. It is ridiculous, this one. She went down to Waco, Texas, and she stayed in this like A-frame cabin. I'll tell you some details on the property, but you can go check out the video. We'll link it down below here as well. But the owner of this property bought the land for $138,000. They put work into it. There was a lake on the piece of property. They dredged it, they expanded it, they made it nicer. And then they built 7 of these A-frame cabins around the property, reasonably priced. Like, he GC'd it himself, I believe. The builds were $220,000 each. So all in between the land, fixing up the land and the builds and holding costs, I believe he was into it for about $2 million. And you're probably thinking like, Corey, that is crazy. I don't have $2 million to invest in anything right now, but I just want to show you the numbers because you can always scale this back and go, okay, if I bought something a quarter that size or a fifth that size, what kind of returns would I need? But this thing nets, after all expenses, after debt servicing, $500,000 or more each year. So it's a crazy return. Like, this is like a 25 to 27% return annually. And if you bought it all in cash, you'd pay this thing off in less than 4 years. And that's like a 25% cap rate. So it's ridiculous. Very good return, very good example. I'm sure there's even better ones out there. I just want to show people what is possible, because when you expand your mind, you start thinking bigger, then it'll actually maybe get you to take some extra action when it comes to setting up your first furnished rental. Third point here is going to be a little bit crazy, but bear with me now. I'm sure you'll understand once we get to the end here, but it is actually trailer parks, okay? Hear me out, all right? Now, when interest rates are going up high, you really have to be looking at like, what is my most cost-effective property that I could be getting for the money, okay? So the least price construction when it comes to things out there in the marketplace is typically modular or trailer parks, okay? So when you're looking at trailers, up here in Canada, they're not as plentiful. They're a lot more plentiful down in the States, just because it's not a lot of fun to stay in a trailer. A lot of them are only built for like 3 seasons comfortably. You can stay in them year round. You might just need to get some extra insulation or different kind of a package on the build, but the numbers work out really well. And I'll give you a real life example here. At the beginning of COVID, when things were just going crazy, people didn't know if the world was gonna end or not, there was a trailer listed in, it wasn't out in the middle of nowhere, it was actually Kitchener-Waterloo, which, if people don't know where Kitchener-Waterloo is, it's in Ontario, and its population over 500,000. So we're talking about a pretty good sized city here. It was listed in the 140s, and I followed up with a realtor. I don't believe it sold for too much higher than that. It was already renovated, it was vacant, and the person was just wanting to move out to the country, like, kind of doing that COVID retreat kind of a thing. And I asked the realtor, I'm like, what would this property rent for on a monthly basis? Like, I don't know what a trailer rents for. He's like, $1,800, $1,900 a month, plus tenant pays all the utilities. And I was like, holy, that is an awesome return, because when you do the math, that's like a 14% cap rate. You could buy that with like a hard money loan at like 10% interest and still cash flow a little bit every single month. The holding costs weren't that high on it either. So it's no surprise that some of the bigger investors in North America, I'm sure people have heard of Warren Buffett, one of Warren Buffett's companies, Clayton Homes, actually invests in trailers. Some other examples would be, I believe Beardy Brandon from Bigger Pockets has talked about investing into trailer parks and stabilizing them. A person that I've spoken on the same stages of as well. Chris Rude is very heavy on trailer parks and invests in them and has done very, very well there too. And a good friend of mine, Andrew Hines, if you haven't subscribed to Andrew's channel, you can go check it out somewhere here on the screen, or we'll drop the link down below. But Andrew's recently bought a trailer park up in the Tobermory area that he's stabilizing, and he's gonna be looking to give people exceptional stays there, unique experiences. So it just goes to show, when you start to stack some of these strategies, there's lots of examples on Airbnb of people renting out cool Airstream trailers and stuff as well. But when you get the right type of a buy, you will still be able to cash flow even at higher interest rates. So that was the third example here. Let's get to the next one that's kind of a sleeper, not too many people have been talking about. All right, one of the later strategies here, but I was saving some of the best for last, and it's actually, I'm surprised not more people are talking about it, but it is student rentals. Now, I cut my teeth on student rentals a long time ago, and it used to be all the buzz, but maybe just the buzz is going somewhere else right now. But if you're prepared to put a little bit more time and effort into it, because who's kidding who, a lot of students don't know how to cook, clean, or take out the garbage, and you got to make sure you get your avatar right, which I'll describe a little bit later who you should be looking for. But student rentals are really great. If we rewind the clock a little bit and look at what's been happening here during COVID, they're doing really well. So essentially what happened was, obviously schools were locked down, students wanted to be breaking their leases, which caused a lot of not so happy landlords or owners or property management companies. I even manage some student rentals. I have some myself. So we were having to re-rent rooms and deal with subletters and all that sort of stuff. students wanting to flake out. A lot of them just kind of stuck to their leases, which were great. They signed some paperwork and they knew they had to follow through on it. However, a lot of people just said, you know what, it's peak real estate right now. I'm out, I'm pulling the chute, I'm selling this thing. And they got to sell and cash out when the market was high. The only downside of that is that now that student rental, that inventory is permanently gone. Like, it's not gonna come back onto the market until someone else brings some new inventory back on. So what happens when demand is still high and supply is low? You're gonna have an increase in prices, all right? So what used to rent for $600 or maybe $650 a month is now renting for like $700, $750, even as high as $900 in some markets. If you don't believe me, go do some of your research. But now, how, Corey, would this cash flow when interest rates go up to, if they ever do go up to 10%? Well, I'll give you a real life example here. Recently, one of our students in our inner circle, we were on our weekly mastermind call, and I was talking to a real estate agent because I'm always connecting just to see what's new, what's changing, what's out there, what hasn't sold. Realtor up in Sudbury mentioned this property that had 8 bedrooms. It actually had 2 municipal addresses on one property, so it wasn't just one big 8-bedroom house. It could be turned into a triplex, and it was in pretty decent shape. It was just right after a rate hike, and like people are kind of sitting on their hands. So we pitched it on our call. We had a student lock it up, conditional. They inspected it. I believe they bought it in the low 400s, and they will put a little bit of money into it, not a lot, but when you can buy something for $50,000 to $55,000 per bedroom, I mean, you're going to be able to cash flow really well, because when you do the math, $55,000, but then you're renting it for $600, $650, $700 a room, you're gonna be cash flowing. Yes, I know there's some other expenses in there, but I believe that this property would make a little bit of cash flow, even at 10% interest rates. And you know, when you, again, provide a premium service, like if you furnish some of those rooms, the international students and some of the more Easterning students just like to show up with their suitcase full of clothes and a little bit of food and just get right to studying, right? Not dealing with furniture and moving and all that kind of jazz. So these are the avatars that you want to be looking for, or the things that you need to do. So number one, you need to make sure that you can market your property really well to catch the attention of the students, okay? Because everything's always, the grass is always greener, or the loudest person wins when it comes to a student. Make sure you're marketing it early enough so you can actually cast a big funnel and get the most people falling into your funnel. You need to screen them really well is the second point, okay? You want to make sure you're doing your reference checks. You want to make sure that you get the guarantor form signed by the parents. Make sure you talk to the parents and vet them, right? So your ideal avatar is going to be someone who is not a partier. Both males and females like to party. Both males and females can be messy and not follow through on different things. So there's no really good or bad there. However, what you want is the more studious students, okay? The ones that don't really know what partying is, even if it, knock them over back of the head. So you want people that are probably in more challenging programs like engineering, aviation, dentistry, working on their PhDs. We love those kinds of students. And another bonus when it comes to student rentals is that they don't stay forever, okay? They turn over every year or two. So you don't have to worry about getting locked into a low rent. You can go reset that rent at market rates, which rent is going up just like inflation here too. Student rentals, just make sure you have your eyes wide open. Be ready for a little bit more management, but it's an awesome strategy. So we're bringing it home here with the last strategy. Before I mention the last one here, there's lots of other strategies that work well, like land development, because you're typically sitting on this thing, you're getting it ready to get it to the starting line. And then once it's at the starting line, you can print cash. That's what it seems like, right? So if you're holding it with like hard money rates at 10, 12%, it'll still work, because once you get your property or your project to the finish line, you're gonna be able to print that kind of money. Rent to owns also work really well. I've been talking to some rent to own experts recently, and they've got some pretty cool strategies. I might do a YouTube video here in the future. Just what is rent to own? What is rent to own done well? What types of people need a rent to own? All those sorts of things. But the very last strategy here, I appreciate everybody watching right till the very end, is, believe it or not, the good old fashioned BRRRR. And if you don't know what the BRRRR is, when you buy something, you renovate it, you re-rent it, you refinance your money back out, and then you repeat the process, okay? So case in point, I've done BRRRRs recently. I bought them with a hard money loan and stabilized the property, and then I stacked in some extra strategies here like we talked about earlier. We furnished some of the units. One of my properties in particular was a fourplex that we bought. We furnished 3 of the units. It took us a little while to renovate it because we were doing cash for keys and having people exit stage left. We did the units up nice. We didn't go over the top, crazy high end, because we were renting it to blue collar workers. They typically aren't looking for luxury rental properties. They're just looking for good, clean, things that can be furnished with IKEA and JISC and the more chic type of furniture. And it's worked out extremely well. So even if I had to keep holding that loan at 10 or 12%, we'd still be cash flowing on it because it's one of my best cash flow properties. We did flip it into a lower mortgage, but I want to let people know like BRRRRs still work with higher interest rates. You just really have to level up your skills, okay? You need to be able to find the best properties, the most motivated sellers, the ones with the most upside potential. Okay, those are the skills that you need to level up as a real estate investor. I know I've talked about this in other videos, but now is the time to invest in yourself and level up. And speaking of that, if you want to level up into yourself, we have some links in the description here as well. We have programs and courses for investors of all different levels, right from beginner all the way to more advanced. So if it's something that interests you and you're serious about it, fill out a coaching application form down below. But I want to thank everybody for watching right to the very end. Don't forget to subscribe and like and drop a comment down below. It really shows us what we should be writing or making on the next video. Until next time, friends, real estate does work, okay? I proved all the haters wrong here when it comes to what if interest rates go up into the double digits. Hey, it's not going anywhere. There's still going to be great opportunities. Home prices will get driven down at that point and you'll still be able to cash flow. So we'll see you on the next one. Keep taking shots when it comes to real estate. Get your offers in. We'll talk to you soon.